today we talk about what's called events. Events are kind of these big moments that happen in
I just want to preface events as a lot of market meta information. So you're thinking about events, you're thinking about market meta, not only on the exterior, but interior events as well. So events really starts to break away from creating market meta and elaborating on market meta. Gotta thumb this up. I always forget to do that. It breaks away from just creating a market meta in a larger landscape. It also is the interior meta, which wouldn't actually be called meta at all. It would be called events because meta dictates the. But I suppose you could have like a current meta, but typically meta has a wrapper around an entirety of something. So a larger event has a meta, and that's kind of what defines and dictates things to come. And events I guess would fall under meta, but I don't like to get too many terms around meta. Events and meta are kind of, I just see it as the same thing instead of creating a bulk of terms around meta and events. They are the feeling of the market, right? And what is expected to happen based on moves.
in Bitcoin, or actually any stock, not just Bitcoin, but any stock really. And you know what we could do? Maybe to start this one off, we can do something a little different. We can go to S&P 500, talk about this same type of thing. It looks like I already have something charted here, some levels picked. So we're going to do something a little different. We're going to do just and we'll go back to Bitcoin. That's fine, but just to show the relevance in all markets. Events are. It's funny because this actually looks a little bit like Bitcoin right now. Events are the moments that are the larger.
To video quality's down. It's set to 4K right now. I'll turn it to something lower and then back to 4K. Maybe that will help in some way. Is it okay? You also have a quality cog. AOJ, and thanks for the donation yesterday on stream, by the way. Thank you. You also have a quality option on your side on the GateX video bar there. There should be a quality select, like the settings gear, the cog in the corner. There should be something like that on your screen too. Because for me, I'm on 4K.
Moments in charts. So you have these, big moves up, big moves down.
Perfect.
Events create kind of these areas where things either stay still for a long time or have a big move up or down. So an event is something that obviously, yeah, like you can see one right here. S&P had been moving up for a long time. It had broken its level, its weekly hold.
So before we even get into going too much further in this video, what event would this create? So you have to think of events as moments in the charts, and then it can create an event. So, yeah, what event does this create by hitting this weekly? What are we thinking about in terms of events? Or maybe we should get a little further in the video.
Like
Keep that in mind, and we'll get a little further in the video. But start to think about, okay, we've hit this weekly hold level, right? It's hit it perfectly. What type of event could that create?
Look at S&P here. You can kind of back trail from this moment here. Yeah, and even earlier in time here, you can back trail these hold levels. Or here's one right here. And so this is range right there. So if you were to take this move, oops, no, we don't want to show history. We just want to copy and paste the level. If we were to show the history, that level ladders this, and this, this ladders to here. And so basically just your hold levels, right? And this never gets tested, and this never gets tested, and then you've got this
Right
tested,
now,
and it creates the
when
base of the move, right?
When I'm talking about we're laddering this move,
here.
Let's just go
if
back
we were to
here
show
for
the
a
history,
second.
this move, oops,
When I say we show the
I
history,
want
you
to
got to
show
see
history. We
my
just want to
cursor on the
copy and
left
paste the
side.
level.
My
If we were to show
arrow
the history,
pointer,
this move, oops,
you can see
we
it
don't want
ladders
to
to
show
this
history.
candle
We
right
just want to
here,
copy
and
and
then
paste
this
the
one
level.
here.
If we were to show the
ladders to
history,
right
that
there,
level
right? And
ladders
this
this,
whole
and
level
this,
here
this ladders to
there,
here.
right?
So
that's
basically just your
when I'm saying we're laddering from point to point, that's what we're referring to. And then even this backside ladders here. Next point would be here, which gets laddered right there, which then creates a reverse right here, which then is here. This, which can also be a reverse, which is right there. So that reverse gets hit. So this has actually been following its trail to the T. So that skips over. So that reverse is active. So if we're thinking about active and non-active levels, realize that this reverse level is active, right? Because it has skipped over it. So it becomes an active reverse level. It created the candidation for it and skipped over it completely. So it does make it candidate for reverse level. and this one here gets hit there. See, when I'm talking about following the trail, I'm always following it on this side. I'm not using my eyes to look at this level and then drag it straight to the right. That would be a criminal error to do that. That would be, well, it's not a criminal error, but it would be a big misstep, because you would see this and say, oh, what's next? And then you would have missed all what could possibly be moves in here. In this moment, it's not, but you always have to have that bit of an outlook where you can see what it's tested, but also be able to still understand this information in here, because it could still be current in the move.
Your hold levels, right? And this never gets tested, and this never gets tested, and then you've got this tested, and it creates the base of a move, right? So, and you've got this one right here, which creates the base of a move, and some other deeper hold level from back here. Looks like this was a bit of a hold level right there, and that was the actual original base of the move. So kind of like an origin level. And so fine, it trails the move, and so to all these moments here, and then you get to here, and same thing. So you break this base that you had right here. So let's identify this first as we'll do it like this. We'll do it a little cleaner today. We'll go. Oh no, what is that? Okay, we're gonna go base one. Actually, yeah. Okay, we'll go base one. I'm not sure what this panel is. No, I don't want to do any of that. Base one. Come on.
I'd like to just skip forward
Test
here,
it.
save a little bit of time. Wait, we might actually need this. We can. I
So
think this doesn't really make sense to go through it, but it's fine. We can go through it.
Base one.
Just because the group is past this stuff. Fine, we'll go through
Base
it.
two, right? This hadn't been created, and
So base 1 and 2, first level, origin of the move, RA, those would share parts of the move.
If you were to take this to this point here, you would just have base one and base two in this move, actually, when this gets created here. Might take a few minutes here, so I'll just let this run through. And there's the base of the move. So you have, these should actually be, this is the first base, that's the second base. Reverse these a little bit here. First base, second base, and creates its new base, right? So this is the first thing to know about events, is that events, they kind of tell a story about what's going to happen next. So it's going to be pretty important to understand this for any stock going forward. It's going to be important to understand this for Bitcoin right now. It's S&P 500, all stocks, right? So you have base one is tested. You have base two is created and tested right here. This is kind of a very small base. It's only really been tested once, but it is still a base. So
It's
kind of what happens here, and we're going to
makes it a base. That's its own independent range there, just like this is, and then RA is against these two. Then that's the range there.
Back into the replayer tool here is when you create bases like this and they break, they will typically go after an untested level. So like you've got this base here, you can see it gets hit.
Yeah, you break polarity, it goes after the next range, right?
Creates this trend right here like this, right? And then on the backside of this chart, obviously nothing over here on the S&P, but you would have had some type of break level, hold level in here, something that looks like the hold level would have been around here somewhere. So whatever this was testing ends up being the hold level, goes slightly over, it fails down, and that's perfectly fine. This would have created a possible monthly base in the future. No, it would be actually right here, which is fine. You can go back to the weekly. Anyways, when you have these bases hit like this, and this is pretty much what's happening in Bitcoin right now as well, you have kind of a set of bases toppling onto each other or going above each other, kind of 1, 2, 3 like this. Try to break the move, right? The move breaks down, goes and creates a new base. So what you're going to see is this is called an event. You have something where
and this can be just creating an interior ladder too off that range, right?
You have, like I said, this toppling of a base here. The first one created, the second one created. What could possibly be the next base in the future? And then kind of this untested level right here. So we're going to mark that one. Go like this, put this here. And we're just going to call this untested. This is and we have to realize these are major events, right? These are weekly hold levels. And I believe this one might even be a monthly. Yes, it's the top of a monthly valley there. So
important to know about this one. This had already tested back here. So you'd be going either at a weekly time frame. Being a monthly time frame here, it would be pretty tough to justify something much higher. But at this point here, where you have this monthly backside tested, this is the untested level inside of the larger range. Which, yeah,
So it's a monthly hold level on the highest level, or you can call it the weekly, or that's fine, either one.
below
But
that, you're
you've got these
down
events that
pretty
are being
far.
created in the charts, and so you lose one base, you're going to go down.
Yes, PX. I'll just use the same chart because I have monthly, or was it a weekly? Weekly level. Okay, so you could actually go for, because this is the weekly backside that's being tested here. So you could actually go to the monthly range next. So yeah, I don't even want to stop here. You'd go further in the range. Would be, yeah, I don't really see.
Onto the next base untested, right? And here, break this trend, fine. You're going to move up, and we're just going to let this play out for a second. There's your hold level. Break over that, right? Same thing. Your hold level is probably a little higher here. It's probably right there. Break over that hold level. That's fine. You're at this kind of all-time high, and this is where we're going to stop it. Okay, so this is one type of one type of an event down here, right? So we're going to call this event one. Event one. So this is kind of getting into the realm of you guys presumably know everything about bases, hold levels, what ranges can be attacked and why, trends, what they do, how trends break, what they represent, how to array them out. So this is kind of creating events off of all these larger things together now, right? So this event here, we're going to call this, say, event bases of moves, right? So this is a different type of event that's happening. This is the bases of moves, right? I don't know why I capitalize that B. That's fine. Going to do like this: event one, bases of moves, right? So you have the base of a move here. You have the base of a move here. The next base that presumably could.
So why would bases of moves here as an event? Why would this be important to kind of mark this in our minds as the bases of moves? Why would that be important? We're creating events, and the event is going to help us dictate what's going forward in the future. Why would knowing the bases of moves be important here? Or what is some of the things that we would also say the bases of moves are going to tell us? Polarity, bang on, Dak and Joe. So if we are attacking polarity as bases of moves, let's use B3 for an example here. B3 being the event that was tested. Why would that be important to understand that this is polarity? What can that tell us going forward in the future? And you have to think about a queue of actions here. Loss of the base, so we can say polarity. Loss of polarity will gap to the next polarity. That would be further in the queue. What would happen before that? Next bigger time frame hold. True. But if we've attacked bases, what can that create based on that event? If we've created a base here, right? Like if we've created a base here, or this is the base and we've went and attacked it, what does that create? A ladder, yeah. And what do we get from ladders? Range trend, bang. How do you got it? You create a range trend, which means a reverse is now a candidate for hitting a move. So you have either created, so there's a distinction there to be made. You have either tested the hold level and it isn't the candidate for a reverse, But what is a candidate for a reverse is when you go past the hold level, but you stay inside of polarity, creating a range trend, just like we saw on stream yesterday with that 1 minute Bitcoin level, right? For anybody who watched the stream yesterday. Ooh, okay, let's find it here. Maybe almost a mirror image of the same thing happening. You have I believe it was right here. I think this was it. We're gonna find it. Don't worry. We're gonna find it. Take this replay. Pretty sure it's in here. Oh, no, it's back here. It's this right here. Isn't it this? I believe it was. No, it wasn't this. Oh man, I'm gonna be looking forever for this. Not that. It's in here. If I can't find it here, there it is, right here. Yep. Right here. Base. It's the link for the YouTube video that we just have we're watching. Base and range. Go past the level, right? That's polarity. Go past the level, create an interior trend. Okay. So now we are going to go like this. And I am just going to do it on this time frame. I believe it's on the 5-minute time frame. This, if it serves me correctly. Okay, we could do the 5-minute time. Pretty sure it was the 5. This one right here. Okay. Just like you're seeing on that S&P chart, attack polarity by deep diving the move, create your interior range trend. It makes your reverse level a candidate for future moves. That's where you see reverse levels are active, the trade. When you go past the level, but you attack the base of a move while creating that range trend. It gives you the final moment, and then you can see perfectly how this thing bounces off, right? Hits the reverse, cues forward, hits trend, right? Once trend breaks, move's gone. Or in this case, it was happened much quicker than that. But anyways, point being is we saw the same thing on stream yesterday on Bitcoin. The same thing happened where you had the base of a move goes right through it and activates the reverse level. So that's what you're seeing when you go through the base of a move. So you attack polarity, and if you create the range trend and the hold level is there and active, it becomes a reverse hold level. Because almost like following that same queue of events. You know how we follow hold levels and we follow the certain queue of events of a hold level? Well, the trend is a level 2. So it's the same queue of events. If you go past the level and create a trend, but stay within polarity, or the latter point, you've created your trend, right? So you've created your trend by doing that, but the level is still active, right? So you active and inactive parts of our charts
could be created is down here. So when you lose this base, that's where you're.
So that would be kind of the important cue to understand there is that, okay, we are attacking bases of moves. The event is that we are going after polarity. Are we going to hit a hold level and create a trend that needs to be decycled? Because some trends need to be decycled and some trends don't. This is one that would likely need to be decycled. I think you have to look at the move to make that decision final, because there's a couple other things that would have to be considered. But if it's hitting a hold level, the trend needs to be decycled, because actually the trend, the polarity in the move is that trend. If it's going through a hold level and laddering some further part of risk, the hold level is active and the trend doesn't need to be decycled. Instead, hold levels need to be lost. So we won't go too far down that road, because that's, further and further into BFE2. But anyways, the point being is that the event of polarity has a cue starter. It starts the fire. It's a cue starter, right? Like hit the hold level, That's fine. No reverse is active. Go past the hold level, attack the base by laddering it. Hold level is active. So
Yeah,
that's, pretty important to understand what the queue, what the events, what queue they create.
exists, right? So you come up to this range here somewhere, you start to lose the move, you lose this base, you're presumably gapping to here, right? And then the same thing, when you lose this base, you're presumably gapping to here, or so forth to the untested level, right? So this event here is going to be something different than what we're looking up over here. This event is the basis of moves. This is very much the same. It's the same thing as hold levels, untested hold levels. When you have bases of moves, when you break a base, you're going to go to another base of a move, right? So when you can create the base of a move, and what I mean by that is this can create the base of a move here because it has been tested. When you've tested, okay, so we're going to put an X over this one. This is tested, right? This base.
And that can create the base of a move because it can open up opportunities for polarity. By already being tested, it opens polarity inside the range. Not only hard closing, but ladder polarity, hard closing, origin levels. A test of a move can create an event.
Is
Can create
tested.
a base
This
of a move.
creates a base of a move here. This is being tested. When this breaks, it will gap to the next
That's how
spot
you have
where
to classify bases. Is that once they're tested, like if a hold level gets tested, it can create a base because there's break levels which can create origin levels. So when levels get tested, they can create
it can
bases.
actually create the next base of a move. So again, this is a different type of event that's happening. This is the basis of a move. So if we were to, let me try something here, go like this, and we're going to go to XBT for a quick second and do just kind of a comparison here. Sure. Or do we want to go to BTC? Okay, you know what? We'll just go to XBT. That's fine. And we're just going to delete whatever this is. And we're going to kind of create the same scenario where you have kind of this, okay, you've got a base of a move here, you've got a base of a move there, and this should be right here, right? Like this is one base of a move. What could presumably create your next base? Well, this could, right? So this is something that we need to be very aware of, whatever this is back here. Okay, so we're going to take a look at this. Okay, so obviously we have nothing on this chart, right? And if you were to pull this back, you'd actually know that this is the weekly right here, right? So you actually could technically go and create your next base off of, I believe it's this right here, right? Well, you actually have this down here, which is the real level that was hit, but you can use this for this chart demonstration because it doesn't quite reach this down here, right? So this could presumably create another base of a move, this level right here. So when you start to break this weekly base, you can actually gap straight down to that right there, right? And then we're going to go into some smaller timeframes and look at that same exact example. So if you were to move this to the daily here, so you've got the base of the move here. You could even go to some lower timeframes here because this has actually been happening quite often in Bitcoin right now. You've got the base of the move right here. Like this is a base of a move, right? That base is already created, right? Is there any bases that could be created here? Well, yes, actually right here. So this is actually where you could go next on a higher time frame. This is still a relevant level. You can see it. So daily right there, tested once. So what's going to happen is you're going to keep creating these kind of these laddering points like this, and you're going to keep creating these bases of moves. And we can see this one can't be used because the base has already been tested, right? This one can't be used. The base has already been tested. Okay, so let's actually just delete these brushstrokes, go into the hourly charts and see where else we can find these bases of the moves, right? So, oops, not like that. Let's see here and backside valley right here, right? So you've got this right here. This base of the move is presumably tested. So this is going to create the same type of event that happened here. So when you have this base of a move and it keeps testing it like this, it's going to gap, right? Like so when you collapse this level, it's going to gap to presumably what could be the next base of a move. So again, this is a very specific type of event that's happening. So, and this is all part of this lesson on events to show you guys that there are specific types of events that happen in the charts that show you where something is going to go, because you're all going to be left with the question of, oh, which hold level does it go after? Which range does it target? Which trend is it breaking? Like there's all these, because they exist everywhere, right? You could have a hold level here and it's untested, but it doesn't get respected. But sometimes it does, leaving some kind of weird question like, okay, why does it get respected this time, but not that time? Well, this is because there's things called events in our charts, right? So, and then we're going to come back here, take a look at this, and maybe we can create some. Actually, I don't think there's any I don't think there's any bases on the top. Actually, you're just laddering bases from the bottom, or sorry, so you're just laddering off the top. Like you've got this. Like you've just been laddering, which is creating a trend versus creating the bases of a move, right? Like on this side, you're creating bases that are constantly being hit and broken down. On this side, you're not doing that. You're just creating ladder points. This is a very distinct difference here. So we're going to go back to S&P now and look at this. So we've kind of talked about bases of the move, and we're going to come back to this. We're just going to create a couple different events that could possibly be happening. And so that's great. Let's just pause this, get this off the chart. We don't need that. So you've got your hold level here, and then this moves up into this range, or whatever the hold level in between these are right here. Maybe it's a base of a move right here somewhere, or whatever it is. We don't need to break this chart down to look at that. What we're looking at here is a little different. So here we've got something a little different happening. So as to where we have an event down here where you're creating these bases of these moves and you're gapping to the next bases, what you're doing is you're doing a completely different event up here. So we're going to copy this, paste this one. We're going to go event 2. And just for the lack of a better term, we're just going to call this a pullback, right? Or this is perfectly fine term, pullback, or the top of a move, or whatever it is. Target is hit, right? We'll say that target is hit. Target is hit. And this hits reverse trend from the past, actually, that's found back in this region here. If memory serves me correctly, it was on a monthly chart. So this is oops. I'll try to quickly find this. This was what's called a reverse trend, which we haven't talked about yet. But if memory serves me correctly, it is this right here. Oh, that right there, reverse trend. Maybe it's a higher time frame. Oh, because I'm not using the 12 month. That's why. That's right. Because S&P, you can use the larger time frames. Would be this right here. Yeah. So target is hit. Oops. Should be the top there. It's the first one I had there. The top of the trend to the bottom of the biggest time frame. So this is what's called a reverse trend. Obviously, we haven't looked at this yet, but this is
it's a very diluted version of a reverse trend.
When you're kind of not be using them, all-time high here. It's the same thing. You're using your distribution to like accumulation candle just a little differently, and then all you're doing is you're using the top of a move.
There was a way that
this is slightly different than what we've ever seen or done before. This is
wouldn't really use
when something is outside the bound of having any levels where it'll go, right? So yeah, it's reverse trend falls into the lessons of reverse levels, reverse trends, which back you. And yeah, fine. You could adapt this further on the day. Did I not snap that right? Oh boy, like that's the right one. And again, we'll go over this in the future. Not important for today's lesson, but anyways, this is important to understand that
or another
event
time.
number 2 is hit, right? So event 2, target is hit, right? So this is a different type of event that's happening on our chart. So target is hit on the S&P. This creates a different type of move, just kind of like this. Look, you have something like, I looked at this recently the other day, and so fine, a target is hit, right? Like a target is hit. So, very clear on the charts. You have targets, target is hit, right? The exact same thing we're looking at here. Target is hit. So what happens? It creates a different type of event, right? Same thing as a knife catch. Same thing as a knife catch. Same thing as any hold level that we go after. Any kind of extreme moment. If this was distribution and that was our hold level, we would go after that hold level, right? So this is creating a different event. This is creating kind of a long-term pullback, or what would be where you would look at event number 1, and we'll flip this back over. Event number 1 as to where this is a completely different move. You lose a base, you're going to go after presumably what could create the next base of a move, which would be this, right? This could presumably create the next base of a move. This is going to go after what is left below that. So if the event over here is creating the bases of moves, obviously you can't use this as a level anymore. This can no longer create the base of a move. This is a very different chart now from being in this moment to that moment here, right? So you can actually just get rid of this replay tool. And once these events happen, this is gone, right? Like this is gone, this is gone, this is gone. There's nothing left of importance in there. At this moment here, you simply have either this to hold the move up or something on a smaller time frame down here, right? Again, larger time frame, you either have this, which you could just watch it for a minute. This is completely different, right? Like all these bases are gone. This would actually be base one now, which would bring you into the exact same scenario of what could presumably create your next base of a move, right? So this is already a base of a move. It's been tested here and here. What could presumably create your next base? Well, you don't have a base below this. Actually, if you did, it would be right here. It would be right here. Oops, no, wrong one. If you did have the base of a move, it would be right here, which could possibly be where S&P falls to in the future again. If something happens, its next target would be this, which could presumably create the next thing. So as you would have the event, this event here, you'd have the same event down here, which could be, events kind of 1.5. We're going to call it 1.5, just because it's not quite event 2, but it's event 1.5. This could presumably be the target in the future, because when you start creating these bases of the move for S&P, once that breaks, it's going to kind of fall through this and fall through this, which would just bring you right to this moment here, right? So anyways, we're going to let this thing play out. Right, target is hit, different type of event. So now you've got this scenario where you're saying, okay, well, if target is hit, what does that mean for this chart, right? Like, if target is hit, what does that mean? Well, it means that you're going after your next untested move, right? So you've got event 1.5 here, you've got an untested level here. This can no longer hit the ladder. Once a target is hit, right, these are knife catches. So the kind of one of the major difference here between event 1 and event 2 is event 2 is a target. Event 1 is kind of the collapse of a move, right? Event 1, where you have the base of a move, these don't become targets. Bases aren't really targets. They're moments of polarity, as to where this target is a moment of polarity, but it's not going to sit here and see if it can snap over and up, because it doesn't have any levels there, right? So rather what it's going to do is it's going to have a knife catch and a knife catch, right? Because they're untested levels. So untested levels give you knife catches. Bases of moves give you points of polarity, right? Or gaps that exist. So you could do, we could just hit play here. And so you get back to this right here. I'm not sure what we marked here. Let's go back into this. Yeah, so this could be the base of a move here, and that's fine. It does hold it through, and it just collapses right down. And you can see it actually does go after that base again. So we can actually just rewind it to here for a second.
Yeah,
Right.
trying to
This
see if
this
it
is
can ladder hard
presumably
close
the
above it,
base
right?
of the move. So we still have this kind of as marked as B1.
Here you would presume, without going into doing charting, that this actually needs to hard close this trend in order to go after the next level. You assume some kind of lower time frame hard closing of the trend.
Because this presumably could be the base in the future. This can't really be a base. Is there anything on the weekly? Yeah, we are on the weekly. So this can't really be the base of a move here. Like there's nothing here that could create this as a base. This could right here. This cannot, right? So you have a few different moves here, and you have an untested level right here. So when we're looking at this chart and we're deciding, okay, what makes sense here, right? If event 2 is triggered, which is the target is hit, what makes sense here? Do we just go after this level and keep laddering up? Do we go after the base of a move? Do we presumably go after what could create the actual base of a move, or do we go to the untested level?
So the interesting thing about this is that when you're asking the question of what could happen next, like we look at Bitcoin or whatever chart, I don't know, zoom out a time frame. So you're talking about events and market at a larger scale. You're just saying to yourself, like, what could happen if so and so hits? It's really important to create that queue of events from the bottom side. This is another thing I did on stream yesterday, and people were saying, so somebody said like, oh, I hope it doesn't go below 42,000 on stream, and I had mentioned that, because they said, oh, I hope it doesn't go below 42,000, because if it does, I'll get my account liquidated. And then I had mentioned like, yeah, you're probably going to go much lower, so hopefully you're your position there or get out or whatever. Um, looking at the events of the chart, you really have to create the proper queue from the start. So if you were looking at this, you'd want to create some kind of very, very small angle trend like this, which would give you your local point, which would be something like that, which would give you, your global point, which something that, right? And then your local point, which would be very sharp like this, right? So local trend breaks, right? what is the global trend? Like, where is your global trend? Your global trend would be something like this out here. Your global trend would kind of be an angle like this, showing on the screen at the same time. One second, I just want to make sure this is showing on the screen and I'm not missing this. So your legacy event would be something either like this or even possibly to this candle right there, depending on time frames and how it lines up. And global, local. So when you break this local, you have the kind of the global piece of the chart that's activated, right? Like the global piece is something like this. And so like, where can you deep dive that trend and how can you get there and what levels are protecting it? So, you've got the backside here, which looks like it may have been monthly polarity. No, we're on a weekly time frame, so it can't be that. But that activates kind of those global scenarios. But you can't. It's just like risk assessment. The core foundational piece must be set properly first, and to be worked down, as everything we do in day trading is cycling, moving from the highest point down and forward. Everything trickles down from the top of the mountain. Literally everything in these fields. So even with risk assessment, if we don't find the proper point of polarity inside of our RA, our whole entire RA schematic will be broken. If we don't find the correct trends, our whole events schematic will be broken. So now with events, you are needing to really understand what event creates which moment. And just like RA, you have to create that proper queue of events. So when you're thinking about events, you're thinking about the possibilities. So if you had a very localized trend going like so, like this, once that breaks, you would be looking at what could stay inside of that global part of that move. So this right here, global part of that move would be, I'm assuming it's right here. We'd really have to go chart it, but I'm assuming that's the global trend. And then you'd really need to stay between, like, once you break that local piece, you're really going down to that global event, which is the hold levels here, which can deep dive that global trend, hard close over top of it, all the things we've been working on, right? But really shows you where, and I guess we should just hit play here. It really is important to understand that the events have a queue, just like RA, and working from a trickle standpoint, everything trickles forward or trickles down or decycles, right?
Level, right? Kind of 1, 2, 3, 4.
So once
What's the
this pulls
greediest
back,
and
if
the
it
things that
cannot
make the
hold
most
this
sense here,
localized
right?
piece,
I can tell you right now, if a target is hit, the first ladder point doesn't make sense because you're
no, it
catching
doesn't.
a knife, right? Like,
It doesn't make sense because you are breaking that trend, and then the global piece would be somewhere out like this, right? Like you'd have some kind of global trend here that's derived from this legacy trend, global, and then you'd have some kind of piece that goes like that. So this wouldn't make sense because you'd be breaking that local trend. You'd be creating a cycle if you did that.
if this thing was to keep moving up, it would have to hold this level, and then maybe it could keep moving up. So let's just
And
get to that.
that's a
one. We
maybe.
can talk about that for a second. So right here,
Right there, right? And at this
if
point,
this
you're
level
already
holds,
breaking that localized trend.
that's fine. You'd have some kind of trend right here, and we're just going to go.
So at that point, you'd be breaking local trend and you'd be arraying out that trend, and it can only hold for so long. And then there's kind of like a time bomb also activated on it.
And you know what? We can even
Just kind of goes right through it.
break this down by the
exactly
day,
what you would
maybe.
expect.
Might be a
breaking
little
this
better
trend
to
here.
do this based on
You'd
the day.
expect to go back to the base of that global part of the move.
If this target was to hold, you could create possibly a trend here.
That's perfect.
And on the
Goes to the
grand scheme
level,
of things, looking at this,
goes to the level, represents the globalized part of the move being activated out of the queue of events, just like RA has that 10, 9, 8, 7, 6, 5, 4, 3 down. This also has that same legacy global local down, right? So then this would be
your event 2
is it going to hard close a trend? And if it does, is it now cycling out of the global trend to just go after the
is triggered.
Piece, right?
Event 2 is target is hit, just like a knife catch on the bottom, right?
We can't go next video. That's
MarketSmith by Investors Business Daily is a powerful stock
I think this is
research
going to kick us to the
platform
wrong
designed
video.
to find winning stocks.
See, 69 right here. Let's go. Perfect.
If you catch a knife on any chart.
Okay, let's take a quick fiver and we'll come back and do. Bases are polarity, not knife catch. And that is because the requirement is the hard close the range trend. This was helpful for me. Yeah, and so really importantly that finding that moment of polarity with your risk assessment really becomes Like if you were to analyze this whole thing down for risk, you could find where the points of polarity are and say, okay, well, this purple line is your 10 out of 10. And that would really be the queue of events that would really start allowing you to see what can happen. And then that would allow your events to be created off that, instead of just saying, oh, we always have to hard close a range trend. Because what if range trend's not created yet? Do you just not take all those trades? Right? What if you're catching falling knives creates range trends? It creates moments, right? It's finding the right level and finding the right moment of polarity gives you the best buy spot, which then once that's hit can create the queue of events to happen, which also allows you to see the targets up top. For example, if you were to have like a range trend here and you went all the way down and just laddered off of this here, making this the reverse level, you know you can only go so far up in the move because it kind of has to come back and test that reverse level. So you know you could only go to a certain target, right? So even understanding where polarity exists can start to unhide where your targets are as well, like finding and defining the correct risk assessment, which gives you the proper way to say, okay, you've got a crazy level down here, and that would stay in the confines of this level, but it would deep dive this trend that we have, would really make it so that you understand trend has to hold in the future, which would give you a very clear target. If you know that trend has to hold in the future, you know that you're likely going to back test that trend some point out in time, making your knife catch a swing trade, because it's not going to happen immediately. Rather, it's going to be, okay, move comes down to here, and then you've got that trend that was deep dive, however you want to say it. And then you can go pretty high up in the move, maybe even up to this trend, before you would come down here, and that trend intersection would have that angle of that trend would start to diminish the amount between these two trends, right? Like as time goes on, that amount of space in there diminishes, right? So by understanding what event can be created can help you better understand what your targets can be on the top side, what makes sense to catch a knife as a swing trade, what makes sense to take as target profits. Like it really can help when you start defining the events, because you get a better picture. We have market meta, which is the entire thing, but then you have events as well. But I don't like to get too crazy into prescribing all these terms on events and market meta, because it's not data point driven. More it's like the data points are the sciences, and then the events are more understanding where things can go. So you don't want to flood too many terms on that. You know what I mean, Dak? You don't want to compound terms on top of something where they can't really give you an advantage. But understanding the queue of events allows you to see where it makes sense to take those smart decisions, and so that's really important.
I don't know, maybe we could just go to a 4-hour spot and see where we can catch a knife. Here, backside trend. Oh, actually it's right here, right? Untested hold, or presumably what could be the base of a move right here. Catch a knife, it's going to bounce in the other direction and ladder the move. So it would go there, it would ladder this here, which would ladder this here, which would ladder this here, which would ladder, and so forth until you break that trend. The ladders would just continuously hold against the target, right? Or against the hold level. So the hold level hits, this would have to hold the move in order for it to get above its target, right? So that's fine. It can't hold its move, it falls right through. This is, everybody should know that at this point. This is perfectly common. This is exactly what would happen, and it's going to go to the base of its move, right? So this is target is hit, goes to the base of its move. If it can hold the base of its move, and now we're going to go to XPT, this is where it gets fun. If it can hold the base of its move, right? You can delete this real quick and we can go here. If it can hold the base of its move, it's going to hold it through whatever trend it has, right? So it's going to, it's created the base of this move, it's held it, it's holding the base of its move through its trend, right? Like this. And so you're right here right now on Bitcoin. It's the same thing, right? Like if this creates a base of a move on this time frame here, you've got the weekly, presumably this can create a base. If this continues to hold, maybe it can use trends to bring it up, right? So and then this creates another event, right? Like this is a complete, it's somewhere on the chart. I know that because I saw it paste. There it is. So this is now another new type of event, right? So this is event 3. So this is event 3. Base holding, like base of a move is holding. Oh, we'll just say that base of a move is holding. Okay, so the base of a move is holding, right? This is, you see it happening on Bitcoin right now. S&P, let's see if it happens. The base of a move is holding or not. So whatever this is, it could be right here, I suppose. I'm not really quite sure where the level is in here. I actually haven't looked at this one. Maybe I can quickly go take a look at it. Yeah, you know what? It could be right here. That's fine. The weekly, it could be anything in this range that this hits, right? So it could be that. It could be this. It could be, maybe it's even something bigger time frame. Maybe there's a monthly here. No, just a weekly. It could be a bi-weekly here. It could be a bi-weekly level, or it could simply have not been hit yet. Let's just maybe keep looking at this move to see if it actually gets hit. It doesn't. So there is something in here. Presumably it's right here. This is the hold level here. Okay, that's fine. So that's presumably the hold level, and then you'd have the ladder point right here, right? So you'd have this ladder point right here, which is what it tries to hold, and it can't. So let's rewind this real quick to here and adjust our trend like so, right? You'd even go to the 4-hour charts here, and you probably see where the collapse of the move happens, and it can never quite get over that. At this point, it would have to pretty much ladder off of this, right? Or at least hold the base of the move. So this is a different type of event completely, right? So now we can go back and talk about this. If this continues to be held, you'll create a new event here. Base of a move is holding. This actually never happens, but presumably this is what was attempted to have happened right here, right? You create a base here and you go after it. So there's something a little different about this move, which can be helpful, but not necessarily. You are trying to ladder this move. So you don't actually hit the base of this move. You do try to ladder it. I don't think that's what's happening here on S&P 500, but that's something you should always kind of be aware of. Like when you're looking at this and you're saying, oh, look, it's actually laddering its move, right? So you've got a base creating another base and laddering its move, right? So you always have to kind of look at that as well and not just say, okay, your job is to identify what the event is that's happening and not to force an event to fit in a criteria. Like right here, you can say, okay, here's the base of a move, right? And let's maybe mark this a little better here, right here. Here's what could be the base of a move. Like I know this is true, right? And instead of trying to force this to be the square block into the round hole, we can see it's possibly also laddering. If it never actually hits this base, it's falling through to go down to its next base of a move, right? So it's not your job to sit here and say, this must be this event. Rather, is to create the possibilities and then understand what event is happening, right? So
this is clearly laddering, well, not laddering, but it's clearly hitting this hold level here, right? Like you've got that hold level there holding up the move. Like it's very straightforward there.
Just like here, like we can see, here's a base of a move, here's a base of a move. It's going to presumably ladder to the next base, right? So you've got this right here. So we'll look at that after, right? Because this could be what's the base for the future, right?
Yeah, that could definitely be because you've and the reason that one is because you can ladder off this, creating a range trend. So that would be like a really good spot there at 8,100 mark.
Future, right? So let's go here and look at this, and we're going to go back to the actually, you know what, we're going to leave it on the daily because this is getting pretty violent here on S&P. So again, you have your trend, you have your move, and this is the exact same thing that's happening, right? Event base of a move, right? Target is hit. Are we creating the base of a move? If this continues to hold,
already everybody's thinking, oh, there's an origin level.
You can see that
which
this
is good.
will
That's
be
exactly what you should be thinking
in the future, right? Like this is not what's happening at all. You can tell right there in that moment that it's not. When you start to fall through like that, you can tell that this base is collapsing, right? and so you have a knife catch on the other side. You have your untested level, you have a knife catch, and so the proper event to identify here now, you get rid of all this, and you can get rid of all this. This is no longer relevant. None of that is relevant anymore. Now you've got presumably what could be the base of the move in the future, right? We can call this, we have event 2, target is hit, event 1.5. We're going to leave this until this move goes forward a little more. And we can delete this, right? So now we're in a completely different scenario here where you've got a couple days of action, right? Or I guess this would be about 2 weeks. That's fine. 2 weeks of action. And you see where this move breaks up. We can actually identify the target on the top side here, which would be right here, which is target, right? You're just back at target is hit, right? So we just go here and target is hit perfectly fine. Great, target is hit on the S&P, and this will create now. We're gonna make new events. Event number, we'll just call this 1. We're gonna start all over. Event 1, base of a move for the future. This is a possible base. This isn't confirmed yet, but possible base of a move for the future. Also, what else is this? This is also polarity to bring it up and over its trend. So we'll talk about that in a second. Possible base of move, polarity on reverse trend, right? So you've got polarity on reverse trend, base of a move. Break over this and use this trend to take you into an uptrend for the future. So this is kind of the point in the future for S&P 500 that will just constantly hold this move down. And this is possibly going to create the base of this move. So you'll see over time that S&P will kind of go here and whatever it does, maybe it goes like this. And then when it breaks over this, that's polarity, right? But this is possible base of a move. So on S&P, this should definitely be an area where if it comes here, you can short it, or if it tries to get over it and it just quite can't, you short it. And the second it gets over it, you're out because you're possibly coming here. But you're talking about this event probably isn't going to happen for quite some time, and then you're going to be at the same reverse trend. So maybe a couple different scenarios that can happen is you could come here, test this, break over top of it, go like this, and then fall back and create some base of a move here, or whatever it is, or you come out to here and then this becomes your target, right? Like this reverse trend will end up being your target for the future until you break over it, and at that point you'll make a new hold level off of a reverse level, which again is something we'll talk about another lesson. Reverse levels, reverse transfer. So the event here is possible base of a move, right? This is kind of the lowest it would go in this current move where it is. So we can actually go and just kind of hit play here. Yeah, and there it is again, trying to hit that level. No, it's actually right there right now today. What talk about good timing. Holy Hannah. That's like impeccable timing for this thing. So this is actually trying to get back up and over that. Now, look at the larger scale of things here, right? So you come back to this move. You have event 1, possible base of a move, polarity on reverse trend, right? Event number, we'll call this one 2. This could be a possible base of a move for the future, right? Possible base in the future. Possible base in the future. Event number 3, we'll call this. Event 3. This is indeed the base of the move, right? Because you've already kind of created that there, possible base for the future. And this would be the base of the entire move, which if you create now, I guess the important information here is you create a base here. If that breaks, you fall down to this untested level right here, because these bases won't hold the move anymore. This one won't because it's already tested. This one can, but ultimately it will fail down and go to this, creating the kind of the hold level, which will create the base in the future. So, the important thing about events, now we can go look at Bitcoin. The important thing about events is, again, identifying what's happening in the charts.
So right now, if we were looking at this XBT chart, if this were to fail, you would immediately say this base of the move no longer going to hold up Bitcoin because you've got this base created here. So you're not going to ladder from one base to the next base. This base is established and holding. This base is established. And if you were to move down, you could either go to this rate here, which would be less likely. I think at this point you would have had one trend here, another trend here like that. So you'd be breaking your trend cycle. It would be reasonable to say there could be a range inside of here before the final test of the base right here, and that could kind of be like the base of the move. Well, because it can have an interior range from there to there long term. So that would be something to be aware of with these events.
Make sure you understand what's going to happen next, right? And this is a little more complex than what we've been doing because it's a lot of chart work. It's a lot of kind of thinking of what could possibly be happening. So I'm going to do this a bit on Bitcoin right now. So, you have these levels marked out, and what do you make of this, right? So, you're on XBT right now, and then, so you would be, where is it? Why is my marker not working here? So you would be right here, I believe, and that ladders it to here. So you can just start this from the top. You've got untested right here. So this is fine. This, top of the move is right here on Bitcoin. This is already tested to ladder, right? This has not tested to ladder the move yet. So the top of the move. So let's do the same thing here. So now we're going to create some events. So event 1, top of the move. Where can it possibly go to at a max? Well, this is where it can go to at a max. It can't go past that. Or it could create the base of a move here, right? So we can say event 2 would be possible base, right? This is a possible base for the future. This is what's laddering the move, right? Event number 3, you have this right here. We don't want to worry about that. I'm more concerned about the top of the move and the possible base. Big difference here. This ladders a move down long term. This creates a point that can break it into polarity into a new all-time high, right? So very different, right? So top of the move is what I would be looking at unless I'm given a reason to think otherwise. And then so you have this right here, which is not anything. Base of the move would be whatever this level is right here. So this is the base of the current move. So event 3.
Very clearly an origin, right? Very clearly breakout for the, and if it can hold
base of the move again, right? So this is the base on the top side. Like we can see that as clear as a day. This is the base on the top side. This breaks up and over its range. You're going to go and test a different event. So that's also key information here, is that when you have these events, you're going to have, okay, well, you've got a hold level here. You've got backside here. You've got this hold here. You've got this here, which is possibly creating another base. You've got all these levels, and fine. So 10-7 might stop it. But ultimately, when you break this base, you're going to be gapping into these higher ranges up here, right? So you can see the way that works is where you have these events that lead into each other. So that's fine. That's the top side. Let's work on the bottom side. So we know kind of what's happening here on the top side, and fine. You can, go here and, mark your trends, and fine. We'll add the trend just to make this a little more complete. You add your trend like this, the highest time frame trend that we could possibly have. You can go to the weekly charts, and so fine. You can see, and we'll make this one white. This is the largest time frame, just to get a complete picture, and then we'll go back to the weekly. So you can see, you've got the events of your move, right? Base of the move, top of the move, possible base for the future, right? So this breaks it up into a range that's.
And so on Bitcoin here, you have the legacy trend. Just going to talk about this for a second. That event is just telling you that you're starting to cycle outside of a legacy trend, which means you're starting a cycle that has no bind on it, right? I talked about that earlier in the butterfly effect course, where you have no binds left on it once you start breaking out of the move. And really important that we're not there on Bitcoin anymore. We just simply don't have this kind of legacy information. In the future we will, but for now it's quite far out there if you were to go way out here. And you have to even just create some kind of retesting of this, even just to bring this out to here, just to give yourself some kind of legacy information over time before you go up and try to run up a new cycle on Bitcoin. When you're looking at stocks and you've gotten this huge, I'll just pick ONTX as the first on this. When you have this huge amount of distribution, or maybe we can even just look at ONTX is quite a hit with IRTC. Nah, IRTC is not good. Low, just find something and go through quick fashion. That one would be nowhere close. Possibly Rolls-Royce. Would be one to watch. You've got that. You're just gonna like this here. It could be a different trend completely. It's not really the point is finding the perfect trend right now. What I want to do rather is that, finding that moment in some of these stocks right now that have taken a huge crushing hit. A pretty good strategy to use in the stock markets right now. Here's one. MGI has a pretty crazy trend it's breaking right now. I'm not sure exactly what else is on MGI here. Yeah, maybe looking for a pullback on MGI, stuff like that. I would really be looking to try to find those opportunities in the stock markets. Here's a good one, Flowtech. Oh my God, look at Flowtech. Flowtech becomes something to watch, like hawk, right? Like over the next year, Flowtech, look for the right buy opportunity, or look for it to stabilize, because something like Flowtech, break your legacy trend. It doesn't really have a bind, so this could be, a nice long-term position hold for, up into this range up here, or here, go slightly over it. A few events here. Whatever your target ends up being, I think it's perfectly fine. But that's just a quick mention, I would say, on Bitcoin here breaking its, larger trend. I think when you're thinking about stock markets and how bad the stock markets have been for the last 18 months, kind of kind of this a bear market that we've been in. Looking for those opportunities, I think, is really smart right now. Like Flowtech obviously looks great. Whatever this is, American Superconductor, this is another one, possibly looking really good. Oh, it even goes higher, so I would maybe just use siding with idle up. Yeah, and you have to go through and do this chart. I'm quickly marking, you know, the quickest way possible, just marking whatever I can. But I think this is smart to do in stocks right now, because I think there's going to be a lot of stocks that, you know, after 18 months, things are going to be approaching these points. Things are going to be getting closer to a spot where in the near future, you are going to have maybe some very interesting positions, right? Like you're going to have some very, you know, Tesla, obviously that was a great short on Tesla coming through here. You know, you've already created your trend and trigger out. That's the one's already gone, but maybe Path might be a good one since it hasn't really ever stopped distribution. Path might be a little dangerous still. I think I would stay out of Path. OEL possibly. Oh, OEL's still kind of, isn't it? So it's got a bit of a ways to go, but OEL's not bad. I don't know how much it is. You know, I don't know how great this will be, but OEL might be good. MU, whatever that is. Let's target. GE, I think, isn't quite there, but it will be in the future here. You know, 5 years. Oh yeah, that's a long. BlackBerry broke its move, and then it's come down, and it's still kind of at a point where BlackBerry might not be too bad to chart either. Looks like you've got this to this, which could be coming pretty soon here. Quickly going to throw up a trend on this. BlackBerry. Oops. This was just kind of like a funny thing I did on stream. Don't mind that. BlackBerry, we're about less than a year out. So BlackBerry. So these are the kind of things like I'd be looking for right now in terms of building portfolio. Yeah, AMC is obviously going to have some kind of interior run up and create those interior trends for itself. This is so far gone. It's so far away. It's not even funny. Roku. Yeah, Roku goes back and test trend, right? Roku goes back and test trend, reverses this backside here, or possibly wherever this origin is in here. It might even be right here. I don't think so. There might be an origin here that you can reverse. I think that's Roku. There's a really good opportunity there on Roku. So I like looking through your charts. You know, you're looking for stuff like that. Jesus, what happened with Zomedia? Oh yeah, Zomedia went crazy. It popped the hell off. I remember that. XSPA might be coming soon too. XSPA looks really close actually. I'm not sure how. Yeah, that's a good trend. It's not your legacy trend, but at least it's a good profit generator. So like these are the things I'd be looking for right now in the stock market. There's a lot of this legacy information. Just because you've had this period where, you know, for the past 12 months, like 12, 18 candles, like count them, right? Like count 12 to 18 candles, because that's how long the stock market has kind of been in this downturn. Or, you know, just say 12, yeah, like 18 months, 1, 2, 3, 4. I guess you could just do 1 year minus 6 months. That would be easier. So fourth month, that would be October 2020. Yeah, and then I guess it's even a little bit before that, but you know, you've kind of had this accumulation period already happen. Like if you want to use really simplified or simple down, like, you know, really reduced terms, this accumulation period has already happened. So something like Espressa, you can see like over the course of 2 years, it's been holding, and you know, sometime in the short interim this year, it's going to come and cross that trend. So you know, you're looking for the S&P to stabilize. You're looking for a reason to say okay, and you're trying to get in before that. So you're looking for a reason for the S&P to stabilize, and you know, a trend on the top side to break, something to happen where, you know, there's I'm sure there's going to be lots of good ones. You know, work together as a group or in your teams to find these, because they're like super good opportunities. Share it with a group, right? Like it's this is going to be a little too far out. Maybe, I don't know, without going into timeframes and trends, maybe you'd have something like this, or like maybe here was the trend and then it cycled to here. So maybe you have something like this if you do the work, but that's pretty far away, right? That's 2 years. But XSPA, like this is getting pretty close, right? So taking more of a long-term position on something like this might actually make sense. Like if it can kind of open next week and close over this candle here, this might make sense to take a position if it can kind of create some kind of stability. I know there's a little bit of a better buying opportunity down here, so things are going to drop a little bit for the next couple more weeks, so maybe just look for your setup. Like, I don't know how much lower it's going to go. It depends, I guess, on the factors, but I believe there's a weekly hold level here. Weekly hold here. This is tested, right? Already right now, that's tested through. So you're either kind of like here or here, right? Like make your decision there. And yeah, I think there's a lot of really good opportunity. So like stocks right now for long-term holds, like really looking at this right now, and the events that are happening should really ring through true right now with the stock markets, because there's going to be a lot of things that have gone into this longer accumulation cycle or just starting it. They're going to end up breaking these trends, and there's just going to be a lot of free money in the markets to be had. So I think it's worth at least a thought for people who aren't trading stocks to start considering trading stocks as well as crypto. Because there's, like this is the kind of thing you set your target, and if it gets hit, you just hold it long term. The averages are so high. Yeah, for sure.
Up in here, right? So event 3 and event 2 are much in the same here, as to where event 3 gaps.
And then even using XSPA, you would say, okay, what events have been created? Even right now, you could go into this and say, well, this hit there and that broke there, cycled it to here. So this could be, if this trend starts to hold, this is the accumulation event that's happening. Even, this is pretty long term. You're talking about, 2 years ago, but that's still like the more interior event can give you the buy spots as well, right?
The polarity to the top of the move, and then this event 2 gaps the move to this range in here. Possibly this again, this 13 level, right? So you've got what could be the very top base, and I guess we can mark that one too. That's kind of an important one there.
It's something I was going to do on stream, is make like a list of like up and coming prominent stocks to look at. It was something I was going to do on stream, so by all means, you don't have to. I plan to do it anyways, but I just wasn't planning on doing it today, kind of thing. On the YouTube streams, I'll be having kind of like a list of things I'm watching.
Final polarity in the move, right? Like you break over this, you have nothing left holding you. All these bases, all these origin points are broken, and you're back. The only thing that could stop you at this point is some level in here, if there even is one. I guess we could go take a look. This right here would be your final moment, right? And final moment for Bitcoin. We can call it that. We can call it the event 5 final moment, right? Event 5 final moment. So you have these defined events now in this chart as to give to fill the gaps into what's going to happen with this move, right? You break the base of this move, you're going to go to the top of this move, right? So you break the base of this, right? Let's see.
Well, I just think there's a lot of things great for viewership. Yeah, I just think there's a lot of opportunities to be had, and if we share them as a group, everybody makes money on them. Like, look at how close XSPA is. August, we're not talking about that far away. So this is the kind of thing where you'd be looking for your buying opportunities now. See how, you're not looking on Monday morning, like chill out, right? These things take time. I would rather buy up at 158 right here when we're closer to trend than trying to snipe something at 116 right now and it completely breaks down and collapses its move, because the S&P still looks like it's pulling back a bit. So there's no reason to rush into these things, but to have a prepared list ready to go is like critical, because you're going to find these levels and they're going to bounce. And then, what's going to happen is if the S&P is ready to recover, but it's dumping, this is going to bounce. The S&P is still dumping, right? So this is still dumping with the S&P. All of a sudden the S&P starts to recover and then you break through it. So you have yet that moment prepared, because this bounce can absorb some of the S&P's reduction, right? Like S&P is still going to pull back a bit, but this bounce can absorb some of it because it's going to bounce like crazy and S&P is still dumping. So it will pull back for, a second opportunity. But then if the S&P recovers, then this just starts to do that, right? So you know, these critical levels, they do have like a certain absorption they take, because it is going to be a level that bounces. So if there's, you know, like a 1 week absorption, something like that, so you know, there's no you know, immediate call Monday morning, you know, that's a beginner's mistake. And if you miss the trade, like, oh well, no worries, there's always another trade. There's literally tens of thousands of stocks, hundreds of thousands of stocks to trade. So there's no worry on missing things, right? But you know, also being prepared by seeing time and space between here and the current events that are happening will tell you, like, oh, we just deep dove this, and you know, it bounced and we're still above here, and that's that event right there. And you do have this active as a reverse now, right? So then that event local can tell you as well. So you're talking about events, and you know, right now in the market sentiment, you know, look for these kind of spaces, and yeah, share, like if you've got them, share them. Otherwise, just, you know, because like if one makes money, all make money on these things, right? So that's like an important thing to do. Like just share your, if you find something really interesting, share it, because there's like going to be a lot of money in the stock markets to be made very, very soon. I think stock markets are going to go a bit crazy. It's going to have kind of like a lifetime run. You don't see this kind of stuff not happening very often in stock markets. And you know, coming this year, early next year, you're going to see like a crazy amount of money being made by a lot of people. It's going to be like GME 2.0, but across the board, right? So just be mindful.
Probably about 12% here, 13, 14, oh, 14%. Wow, not bad. So you've got 14% here. You break the base of this move. You go to the top of this, which is going to create a ladder point, right? Which could possibly just be the ladder point for the future. Now, this being hit versus this being hit are two completely different events that will get created in the future, right? One is
and I think that's very exciting and interesting once the group starts getting into these longer term things and making money. And you know, if you have 5 or 10 or 15 people in a position and everybody's up like 200-300%, it kind of becomes this community event where we're all kind of helping manage the position, right? And then it's like, oh look, half of the mentorship group is in like a 400-500% profitable position. You know what I mean? Like that, it's a really cool, powerful thing you can do, and we can do as a group. Because again, like I've been saying this in the past couple of weeks with the career building month, and all part of this is like making money is why we are here. I mean, not to say that everything, again, not to say it's not all cool, but we need to, like, making money is pretty it's a pretty big driving factor in stock markets.
the ladder point off of this and this
SPCE. I remember looking at this. Yeah, I remember looking at this Virgin Galactic. I did this quite some time ago. Boy, look at that bounce. Perfect rate to target. SPCE. I think it needs to stabilize. It might make a move up, but I don't think it's, you know, one of these things that's going to explode. It could, but I don't see any like kind of
one is
immediate trends happening.
Both of these. The other event is just a singular ladder point that's possibly breaking
long-term positions.
Move, right?
They can be helpful.
If you think back to the S&P lesson.
The long-term positions can be helpful when you're talking about having, like, you know, oh, all of a sudden you started trading, like there's kind of a bridge that happens there, or like a gap in your wealth pool where, you know, you're trading and maybe you have like $30,000 in account, or 40 or 50 or whatever the number is. That doesn't really matter. All of a sudden you take some pretty crazy positions, and now you have like 400,000 or 500,000 in an account. Now, whatever that means to each individual, to themselves, maybe that pays for their house and that's all they wanted to get out of it, and they are moving on. Or maybe that's the beginning of having a huge account, or maybe that's a split between both, or maybe that pays off their car and some debt and gives them a $200,000 trading account, or maybe it just gives them a $50,000 trading account and they save the rest for a rainy day, right? Like it just means something different for everybody, but it always ends up being kind of a bridge you cross from one world into the next, where you say, oh, I've accomplished something pretty cool, what's next? So yeah, I think it's good.
That we had where a base is created. Once they are created and back
absolutely tested, I see it's a great,
they will no
great way to
longer
do
respect their move. So let's
sometimes starting out in day trading,
right? So
you know, sometimes starting out in day trading just means taking a few years to build capital and getting used to it. Like that's not a negative or bad path to be on, where you are just taking a few years to build a bulk sum of capital. Like you may be studying for 3 and 4 years, but it might take you 4 years to make that and then on year 4 you made that money, and now you're ready to start and flip that switch. So there's so many different ways it unfolds. There's absolutely nothing wrong with that. There's absolutely nothing wrong with taking your time to build capital. Like, this is a good lesson to learn in stocks, because it shows you like, oh, long term I can make millions of dollars, but it doesn't mean it has to be a compounding thing where it's, $5,000 a day. It could be like one great crazy trade where, it takes you 3 years to get it, but that one trade has paid for, 3 or 4 years of the past income. And then that's the point where you can swap over. So, it doesn't necessarily have to be a thing where, taking these long-term positions are bad. They become more investments, but we still use day trading to find them. We still use day trading and TA to find the smart places to buy, and then they can turn into investments, right? And then you can take your time with it. So, there's all different ways these things can unfold. For me, it's building skill. Exactly. Yeah, exactly. And that kind of gives you that reason and cause, like, hey, I'm not quite as good of a day trader as I want to be yet, but I've made 120K this year. Like, this is okay. I'm taking my time. I'm learning it. Things are happening for me, right?
Move. This has already been tested. It won't hold it again. This is the top of a move, but here's the base. So if we do end up coming back up to this range, don't expect that to be held. Just expect it to either come to this move, creating a base break for the future, right? Because once this base is hit and created, it won't continuously sit there and just bounce off of it, because it's already, one, it's tested level, two, it's the base of a move, and then it just creates further polarity, right? Like this will create further polarity here. This base of this move has already been tested. So once this breaks, you're just going to come to this untested level to ladder the move. If you stop here, you still need to test this base in the future. So that's a big difference. And I'm not even convinced that this is a base that's important. It's possible, but I'm more convinced that this final polarity is the base that needs to be tested. So, in a moment where you kind of break this trend, you could come all the way up, test this, pull back, go to this base to create that as a break point for the future, right? Or you could come and just hit this base and pull back, right? Pull back completely. Or you could hit this and just never come to this base, right? But very, very different outcome based on the event that is being triggered. Let's work on the bottom side of it now. So, we've got these kind of different events that are going to happen, and what we know will happen thereafter. Like this event here, base of the move, we know this is going to break. So we are more looking to take longs down here if we start to break up, which I'm not convinced we are yet, but
this is the exact same thing that we just talked about with XSPA, right? Xperia or whatever this is, Express Spa Group, whatever this is. This is the exact same thing we talked about. Like you'd rather be taking the trend break than trying to possibly catch some interim move. Like you almost want to be trading here, or allow this to come up and then play some kind of in-between move that holds after, breaching that gap a bit. But then just starting to buy in this region becomes kind of, if it holds, great, but then you're just kind of sitting there holding the position without really any kind of forward analysis on it or anything you're really doing. You're just kind of buying because it looks like it may be good in the future. It's kind of like a hopium kind of thing. You're hoping it goes up. You're almost better trying to buy the break. Although we don't buy trends, but at least seeing it hit trend and pull back, or getting to that more polarized moment on the charts and then timing it with more advanced style of trading where you're timing it with a market like the S&P, the DJI, and seeing if that can absorb the last little push down on S&P or DJI, or if it's going to keep going down and then it allows you to get out. That's the more advanced way that we like to do it, of course, but then always in practice is always a little harder than perfecting it to that moment.
Hey, that could change. We're very quick. We're very close to that, these final moments in this chart here.
I like to go bigger time frames, Joe. Like when I'm looking at stocks, especially with this, like I like to have the chart define what's been happening. Something like XSPA, it has been in existence for a while. So with such a big accumulation cycle, I like to get into the bigger time frames. Like, okay, like we don't have anything here other than, you possibly can use this down here as what could be an origin point. So you could deep dive this down to the very bottom of the move. 30 cents, come break back above this, bounce off that. You could use that. You could use the weekly hold, but I'm using larger time frame events because they're what's available here. On something like SPCE, you won't have those. You haven't really been down here long enough to have any kind of information. Like maybe the best you have is, we can delete that one and we can go like this. Maybe you have this as kind of a legacy onset. So with SPCE, you don't have too much information that hasn't been in like a long-term accumulation cycle. I would start to use a little bit of a lower time frame, like maybe here I would use the daily, hoping that it closes over. But if you for the simple fact that you have this trend here and you have that awkward space between, so here you go like this and you just can't really create it. You start to do something like this and you just can't really get above. I would probably just exit this position, but then I would use the event of this. I would use this as the event that dictates the move, right? So then you have to kind of gauge it based on how long these things that, like, is it in a long-term accumulation cycle? Use higher timeframes. Is it more short-term thing like SPCE? And then you can find that spot where it makes sense between has to hold, polarity, creates that awkward move, jumps up here. This is now good all of a sudden. You have like a backside here. Maybe that created an origin. It's like a perfect spot that acts as a shield in the future, right? Like, so you always time frame down what's available that makes sense.
We've been talking about this for a few weeks. Let's work on the bottom side.
Break asshole, still my favorite con quote. Yeah.
So,
friend is not your friend, despite what people say.
Just because I don't want to redo this, and we're gonna put these
People
ones
say
in
that,
red. Maybe
it's like it's true, but it's not true.
Difference, and we're just gonna start with event 1.
Depends on your
side. So event 1, okay.
Friend is your friend. It depends on your definition of friendship, I suppose.
Untested level.
Okay, bad joke.
Untested level. Okay. So you've got an untested level down here. Great. You have something that can ladder the move long term. I don't think we have anything on the weekly, which we don't. So we don't have anything on the weekly. This could possibly create that weekly point for the future, or you could be back down here testing this, which actually should be more in. Again, we're on XBT. If we were on the other charts, like the real charts, you would see that the level is actually right here. So we're going to possibly make this event number 2. Future base, right? We're not going to slip through this level. We're going to create a base first, and we're going to see if we can ladder off of it. And this is so this is untested level, ladder point, right on the higher time frame, and then you're going to have kind of a bunch of these levels in here. Like this, you're going to have all these daily levels in here where there are other ladder points. We've walked through this move, and so fine, you have this here, which would create the base on a smaller time frame, and this here, which is untested. You've got a smaller 4-hour range here. You've got this right here, I believe was a 12-hour. No, it's not a 12-hour. Was it a 4-hour backside? I know it's one of these time frames because I've done this before. Right here, 4-hour backside right there. How much is this level right here? Okay, there's a level right there. That's where it was. So base of the move, it's kind of already set to break. So you've got this right here. Possibly this right here is your next base point for the future. So this would be an identifiable base right here. This I wouldn't use. This is a clearly identifiable base that you can use. So you've got all these smaller time frame levels, and we're not going to. Okay, fine. We'll leave this one because it's already here. So fine. Let's just create one more. I wasn't going to do the smaller time frame, so that's fine. We can. Event number 3. Future base. 4-hour. We're just going to mark this as 4 hours so I don't get confused. Really, I wouldn't identify that as something important. Possible base, ladder point, base point, right? And comparing this to the top, what do you have? So you have the base of a move here, and what we should do is we should match these up. Event 3 to event 3. So base of the move on the top side, base of the move on the bottom side. So
I would even just use this almost like thinking about Pandora's box, like what it is what it can target kind of thing.
Of the move.
And then, as you go further out in time,
because I want to match
what it is what it can target, and then what it is what it can target, right?
Like
just the larger moves targeting larger moves.
If this is to break and go to the top of the move, where could this event bring you to, right? Well, this event could bring you to.
So here's something I will say. When you're talking about events and bases, you kind of mix them together. Like we have base 3 of a move. This is an origin point. So base can encapsulate a lot of different terms together underneath it. So in this base here, this is an origin point. In this base here, this is clearly I'm thinking there's an origin somewhere if we were to dig down in time frames here. Maybe not. Maybe this is truly just the hold level holding the move, going after the break of a move here. So that might indeed be the case where you would say origin level, hold level, so that you know you're holding your hold level to try to break the move. Like that could give you the understanding of that event and what makes sense with it. And I will say, where you have these events or where you have bases of the moves, it's why events and bases of moves are used together so much here. They become points where you can create that larger information. Like for example, event 1, untested ladder point. This could create a continuous hold of the move, just like event 3, base of the move did here. The event can create the base of the move, but then, you know, the base of the move is polarity. And like we were talking about last week, like bases are polarity. And by finding the bases of the moves, you can understand, like if you were to do it, like, oh, here, maybe just by example might make more sense here. So we go here and we can say, okay, here's the base of a move. The base of a move can be here. So we're just going to mark this as pink. So we have just like kind of this clear, let's go lilac. Oh, it's purple. Fine. No fancy color lilac. Hold level. This is already an origin. So if this, that example, we already have the base kind of being established already here, but that base turned into an origin. So that's fine. Base of a move here would be right here. This is already an origin, not a good example. Stuff's already tested. So you could possibly have the base of a move here. And what would this base create? Like this is the base of a move because it's kind of in its own little capture here, like maybe right here, you've got the 1 hour that laddered there. So this could be a base of a move here. This is testing that hold level, and then this could be the base of a move here. So this base could create an origin. It could create a ladder point off the range. So the base of the move combined with the event can help you understand this could be a possible base of the move. What would the event be created that would also allow the base of the move? So flip the chart here because you got a lot of untested stuff here. So we can even just go up here. This is the base of a move. It's clearly an origin, right? Like we've already got our origin marked there, but we're just going to quickly mark here. The base of a move is clearly an origin. You'd have a hold level here, right? So a hold level here would be also creating the base of the move, and that's either going to create it on the hold level. It's going to deep dive this, creating it as a trend. So it's either going to hit the hold level, the ladder point, or it's going to go after some origin of the move. So this is all a part of RA as well. So when you're looking at where the base of the move can be created, you kind of have, and I don't think I want to use anything in here for this example. I just want to go 1, 2, 3, keep it simple. 1, 2, 3. Hold level is going to hold the move down and go attack lower parts of the move. A ladder point is going to create a trend that is breaking, and hitting an origin is going to set out breakout for the future, right? So these are all different points of points where you could create a base of a move, right? So you have to hit that first. If you hit this, that's the base of your move. And that's understanding where polarity exists, because polarity will now be here, right? Polarity will now be in this little hold level that you create here. Polarity off of this, like if you deep dive this trend, your polarity is going to be your trend, right? Or sorry, if you deep dive the actual leg of the move creating the break, your polarity is going to be your trend, not a hold level, right? Which opens up the candidation for reverse levels to get created in the future. Like you go above this, you go up to here, again, you fall down, all of a sudden, this is a reverse level. You go and you hit this origin, you're setting up the breakout and trying to hold something much further below the move itself, right? So you have different bases of what could possibly happen here in the move, and understanding where the base exists is going to give you, understanding where the base exists is going to give you the event that you need to pay attention to. So bases and events kind of work together. But then, and you know, as I said last week, it's all about creating the polarity of the move, and understanding what level gets hit will create different points of polarity. Again, this creates polarity on hold levels when that hold level sinks, it's polarity of the move. This creates that trend, which can deep dive, open up candidation for reverse levels, and then reverse level becomes polarity. This can be origin point, which typically if it is an origin point, that in itself is breakout. So that can be, broken by this trend here, or it can just be broken by, starting to do this little cycle over top of it where you break out of that cycle. And, when this origin gets hit, it's typically, okay, origin was hit. What's the next event that you would expect? Well, if you think this thing is going to break the next event, then you'd be, what broke the move there, which is polarity. It has to hold this, and if this holds, you're likely breaking that origin level. So events working with bases together to understand polarity really allows you to understand now tying in risk assessment, which is why in the videos risk assessment is next in the blueprint videos. A very light and minor form, or sorry, I believe we went over risk assessment actually already. I think we already did risk assessment, the stripped down version. I think next is reverse levels, is it not? I'm trying to remember. Risk assessed moves. No, risk assessed moves are next. So RA being next on the agenda here. Risk assessed moves, and it's exactly why the queue of butterfly works the way it does, because everything leads into the next. Like I was talking about this on stream yesterday, and people have always asked me this, like, okay, well, it all kind of makes sense as you keep going. Well, that's how it was prescribed from day zero. It was get to events, well, now that we're at the end, it all starts with future of trading, working into blueprint, working into butterfly effect, working point through point through point through point. Like I spent a lot of time diligently working out how to make the queue of these lessons make the most sense. And that's why risk is next, because now you are understanding bases of moves, create the polarity points, and allow you to create the events. You understand where your risk would be in all of these moves and how to risk assess them each separately. And then just at the end of it, getting into reverse levels, which is just not taught till the end for a very obvious reason, because you wouldn't even understand reverse levels if you didn't get that. Okay, here's a trend. Why is it a reverse level? When is it a reverse level? Like what makes it a reverse level? And then we talked about active and non-active parts of moves before. So this is really starting to become like a larger picture, and it all ties into the RA work we did last month. And now with events and bases of moves, as to where, last week I just said, well, bases are polarity, they are, but then creating the event with the base allows you to see what, and allows you further to see what breaks the move, and a little bit more foresight as to what's happening in that move.
We're going to go, that's event 1 on the top side. So what we're going to do, sorry guys, I'm just trying to match this so I can make sense of it in a way that's event 1 is equal to event 1. Top of the move, and we're going to call this bottom of the move.
Yeah, what it is was what it can target. You're really looking at, and then we've talked about deviation a bit, and I think that's a really nice way to start breaking out of what we are expected brackets are, right? Like if you have an origin here and an origin on the bottom side, an origin targeting an origin, what it is what it can target. You're really looking for the point in the between. Like let's say it just goes between these two purple lines, right? Like what it is what it can target. So like you say it goes between this purple line right here and this one here, and let's pretend they're both origins, and then you're looking for one to create the hold level that can all of a sudden break that queue of events. So like what it is what it can target. So now if this creates a hold level, that hold level is targeting a hold level, so it's either going to target the hold level here, and if it breaks past that, then it's going to target this hold level, right? So like this is a very interesting line of theory, and you get into butterfly effect 2 stuff again with that. So you would know what it is what it can target, but then you can start to see another layer down of origin to origin. All of a sudden one hold level hits, well, it has to hold that level, and if it's not holding that level, if that breaks, well, this is the hold level, because a hold level is going to target a hold level. So you can get into a really deep queue there. It's just you can't use that as a basis to make decisions, but you can use it as a basis to understand forward where something can go once you're already in a position based on previous information, like buying the polarity of a move, and then what it creates and targets is what it can go after on the other side. So then it can't be the basis of entry, but it can be the basis of, oh, this is a swing position, or this is a scalp, this is why it makes sense to be a swing position, we're in a swing position, this is why it makes sense to be a position trade now, right? So yeah, there's definitely a really important thing that you're isolating there, I see in Kartik, but it can't be used on its own. Just like most of this can't be used on its own. It's a large playbook, right?
Top of the move, bottom of the move. So event 1 here, which is the actual ladder point in the move, can show you, okay, here's the top of the move, here's the top of the move here. You break this range, you go down to the next untested level, right? So you break this range, you break this base of a move, it's already set to break. You could possibly stop here. So what you could do is, all things equal, you could make it like this. This is the possible base of a move right here. We could put this in red because this is going to create a possible base for the future. This one right here, I'm going to put it right in the middle because it's kind of, we'll go on the bottom of each one. So the bottom of this base of the move, event 3 is equal here. So this is kind of, you can almost see this almost like a Pandora's box, right? Base of the move, base of the move. This is a possible base for the future. This is a possible base. This is the top of the move. This is the bottom of the move, right? So there's a little different as to where this base here is above the top of the move here. This base here is also above, which if all things were equal, this would be below, but that's fine.
It looks
it's not
so
always
good.
going to be, you're not always going to try to force
Background
square
scene for the stream. It looks
block
so
into
good.
a round hole.
It's sunny, numbnuts.
Okay, quick 2-minute break. This one's going to be quick. I'm just filling up my water and I'm back. Let's get through this one as well. So 2 minute, maybe 3 minutes, 3-minute break. Okay. All right, we're good to boogie. Huge fan of pixel art. It's favorite.
So you've got these events
Favorite
here,
art
and
style
they
at the
are
moment.
clearly marked. Now, you've got final polarity there. Where could your final polarity be here? So what event is this? This is event 4 we're doing. Okay, so let's create event 4 here. Event 4 doesn't exist in the same here. Event 4, where you've got final polarity, actually it does exist. What we're seeing here is the visual bug, because they're on XBT, it's not recorded. So what we're gonna go do is BXBT just for a quick second, just to go to this and you guys can see. And yeah, that's fine. Whatever notification that is. We can see on this exchange, it actually does get hit. 36 BXBT froze as well. XBT USD, I believe, maybe BitMEX. Yeah, there we go. We can erase this, and this is where the BitMEX chart that didn't freeze. So this is creating a possible base. So that's 36.48, and then we can just go back to XBT. We have the exact price 36.48, which is 36.54 here, which is fine. So we can just kind of add our own little mark here like this to just indicate that it's normal. We make it the same kind of color here like this. So yeah, good. Just for now anyways. There we go. It's perfect. So final polarity, event 4, final polarity, right? Final polarity. Oh, just got to do this. Final polarity, right? So above that, what do you have? Final moment. Where's the final moment here? Right? Well, this is tested, so it can't be that. That's back tested. This ladder point is tested. You've got this right here. Below that, you do have one more level right here. Everything else is tested. Like this is tested locally. I remember because I was, watching Bitcoin in these moments back here in 2017. But you've got this here, right? So you've got final polarity, and then you would have 2 more possible events here. We'll put them on the bottom like this. Sorry, that's bugging me. It's too thick. There we go. It's a little cleaner. 6, final polarity, event 5, not final. We'll just call it polarity. It's not final polarity. And event 4. This is final polarity. This is not polarity. What am I doing? That's final polarity because that's the base of the move, which is going to gap it to final moments. That's what we called it. We'll just call this a ladder point. I don't think this will even hold the move though. And this would be the final moment. Again, it's up to us to identify what's happening in these moves to make sense of what's going to happen next, these events that happen on the charts, right? And so we've kind of created a broader scope of the what could happen in this move, and where a base can take you to the next base. So this can create the base of a move. This can create the bottom of the move. What creates your possible next range? All these different things. You can use that and go to these charts in the interim, and then you can start doing it on the smaller time frame. So actually, I skipped a bit forward here. So base of a move, can't expect this to be held in the future. This can't be expected to hold in the future unless for some reason you do come back up here. More likely is you're going to create a base right here. So the most likely scenario is that you fall through the move and create the base right here. So event 2, in my opinion, doesn't really make sense because you know what? You've laddered this base here. You've laddered this base here. Once you lose this base, you're going to melt through the bases to create a new base of a move, right? So that's kind of the important moment right here is that, you know, this base here is going to, and we got to fix our brush stroke here because I did change it. 1 second. I'm going to put the arrow back on because I like that for training purposes. Let's just do this and go back to here. So once you kind of break down this piece here, you can't expect this base to hold. Rather, it's going to create a new base of the move, just like it creates a base here. You know, it has a couple of these elongated touches like this. The same thing is going to happen here. It has a first one and has a second one. And then, you know, you're going to see what continues, whether this ladder continues the move. Those are things we can't see yet because we're not there. But what we can see based on events is that once this is breaking, this is going to break and create a base right here, right? So whether you have a ladder point in here somewhere, maybe there's a ladder, but really you're likely just going to touch the exact move and the exact base. So really what's important here is understanding where the level actually is. So if this is the level, right? So for example, create the level, bleed slightly over it, touch it again, right? Create the level, bleed slightly over it, right? Touch it again in the future. Once you come back to here, you likely lose that. You hold this move. Actually, this would not be lost. This would be held. Just like this is holding the move here long term down to go to the next base. This would have to break the move in order to see the bottom of the move, right? In order to create the range for the next base. So this would have to be, you know, the difference here is that, let's just delete these. Can just kind of get rid of this trend for a second. You can see the base of the move gets hit exactly. If you were in this and just, you know, kind of bled over like this, that's very different than hitting the base of a move, right? You know, right here where you have kind of created the base of the move, you know, our next piece is to bleed over a little bit before the move gets respected. You can expect to deep dive this base a bit, right? Because you haven't come to that moment where you've created the base, deep dive the base, respect the base. You've just created the base. Next, deep dive the base, respect the base. If the base of the move is being respected, you're going to start going up and back up to this, or maybe to break your ladder. And this has already been tested. So this won't even hold the move. You won't even come here anyways. You would break a longer term trend and then have a multi-week move up to, you know, one of these ranges up here, right? So it's very different. Like right now we're in the event that we are going to see if this can actually create the base of the move. If this can create the base of the move, which it did right here, right? Like all things equal, test the base, deep dive the base to see if the base is going to hold. This is creating the base, right? So this is kind of a different scenario here. Hold level, create the base. Hold level, create the base. So this will naturally deep dive the move to see if it can hold, right? Unless it has an absorbent amount of support there, which is possible. Sometimes you see that, but not likely. Like the same thing happens here, right? Hold level, deep dive the base to see if it can hold, respect the base, right? Is, you know, hold level, deep dive the base, see if it can respect the base. Same thing, right? Like it is the same thing. You're always going to say, in this event, you create a hold level. You create this event if this holds. And that's typically why these hold levels, they'll deep dive a second time and hold, just like this one does. Hit the hold level, deep dive to see if it can hold, hit the base, right? So this is, you know, that same moment that you would have right here. So all things equal, same moment, except this is just a smaller time frame. So you can't expect a daily hold level to continue to hold this. It has to hold this range for a longer period of time, creating the weekly touches and the weekly. So if you're actually to go back to here, and now you can, sorry, I got to delete this. It's going to bother me. Now you can see where you have the weekly touch the base, deep dive the base, see if it can hold. This is going to have to come down and see if this can actually create the base, or if this is going to deep dive it and see what it's doing. It's already starting to break its base right here. You can
A lot of this is what we were
it's not
talking about, like move targeting a move, right?
This side of the chart where you have create the level, break over it, completely reject it, come back and touch it. This is just simply the first kind of establishment of that hold level to see if this can be the base. At that point where it's deep diving the base, it might come and deep dive the base like this and then see if it can hold. But you don't have the time to really do that.
Yeah, I'm just gonna stick with it's got
Maybe
to
if
be an
you adapt
origin.
this trend out somewhere, you go
Could
after
be
that
wrong, but it
9600
sure
level we're
looks like
looking
one.
at, and then you can adapt this trend here and create a different type of event completely. But you guys can see what I mean about you have to make sense of the event that's happening instead of just trying to force, say, like I've been saying this all lesson, a round or a square block into a round hole, or the other way around, right? So these events of these moves, they will show you what's happening, right? Like you can see it here. This is the weekly. Right now we're in the daily. It's one in the same move, whether it's the weekly here, the daily here. It's one in the same move, but you're going to have to give it more time over the course if you're using the weekly level to create a weekly event that will actually make sense. And really, the next event on this chart is that we're looking to create the base of this move off of the deep dive. So you can't buy the level, but you sure as all beans can deep dive it down to like 80-50 or something like that. You find the logical reason to deep dive the move to where it makes sense. Maybe there's a trend there. Maybe there's a level close by. Maybe there's just something that's a percentage of a way of what, like maybe you've measured this percentage up top and saying, okay, well, how much percentage here did it go? It went an additional 1% here. So, if that's a level there, and, you've got maybe another level you could use would be this, backside. So then, what is this? This might be a little too far away, 2.18. So maybe you'd want to go, 79.78. Maybe you'd want to go like 8,008. So you can capture that level without getting liquidated. You can capture anybody who's buying psychologically at 8,000. And that's the point where you can deep dive this and create this base in the future. Or maybe there's something else in here that you could break down and take a look at, right? There might be something else back here that you could take a look at, right? So that's something as well. There's I'm sure a bunch of information here. You could go and dissect it, see where the 4-hour backside is, what this actually tested, because realistically, it should be whatever this tested here, like whatever that tested there. This is a pretty violent move down, so I wouldn't, I'm sure there's something that gets tested. I'm sure there's an exact level that gets tested, and so you guys can find that. But anyways, maybe you could use this as cause to deep dive this base, and where would that base take you? So then it would be like the same thing. Well, if this base is being respected, this is going way the heck down here. So this base isn't going to hold. So if this base is being respected, where could it possibly go? Right? You use your highest time frame. You don't have anything on the weekly. Yeah, like it could go to the greediest ladder point. That could be what takes you to that 9600 level, which creates your ladder point for the future, right? So you could go from, say, like this. That's not tested, but the range is tested, which I don't like. This is completely untested. I like this one here. So you could go to base of this to here. You've got an 18% move. That's completely realistic and exactly what happens when you slingshot from one side to the other. You go straight down to here, and within a day or two, you'll be back up here, and then you just, somewhere in between floating until you find out where the next piece of the move is, which then just would take your trend and it would just adapt it out to, this point here. If this is where it gets hit or wherever it gets hit, right? Like kind of just to recapture the entirety of the lesson, creating events on our charts is what tells you what happens next. And the creation of events is using, number one, all things equal. Number two, everything in our repertoire, hold levels, bases of moves, origin points, where ladders can exist.
This is a really nice wrap up.
What logically makes sense.
On how to use events and bases together.
Where bases will be created versus where they are already tested and breaking. And this is a unique scenario here, whereas on
base
one
gets
side of the chart,
first, then you have the event.
A weekly base
so
that's
base and then event
created, but hasn't been created yet because it simply doesn't have enough time. So likely won't even be a weekly base in the future. Likely will just be a point where it collapses.
Find out where bases are, and then you can create the events
at a maximum, you could do something like this. And maybe in a week, we can say this is fine. You go back down to here, you come up to here, test this level, and that created this base here. But you really don't have the space to create a base right here of the move. You need a little bit more space. Like this creates a base because it's got space. I don't really see this being able to create a weekly base. More, I see this as a hold level collapsing down to go to be what would create the bottom of the range or the base of the move. And this would be the bottom of the next range. And then, that collapses and you'd be down in these and so forth and so forth, right? To create events, it's all things that we've learned so far. It's understanding why hold levels hold and where they can hold and where they can't hold, trends and what trends do to the move, and where a move will end up holding through a trend, you use this weekly hold level. Maybe you actually have to come all the way down here and hold this out into October, and then you can come up to here before you fall down to here, right? So we have to use our trends to see that. That's not a scenario I would, just an example, not something I would
That was that move
use
right
on the
here.
forefront. Where hold levels will hold, what are ladder points versus bases of the move? When a base collapses, if it's going after an untested level below, simply go back to the S&P, and the lesson we learned in the S&P is that this will be a base for the future right here, right? Just like this will be the base for the future here. It'll probably reject, and either it's going to ladder or it's going to create a base. If it creates the base, this will collapse in the future, leaving it somewhere down
That
below.
was that
much
10-4 that
much
held the
lower
move that we
below,
were talking about
but not
earlier.
likely. But anyways, that's
Market there, it's fine.
what it would
This is
do.
that origin
right?
level, right? Origin levels here.
What are
Ends up
tested
holding, not
bases
hard
like you
closing,
had?
move's gone.
This one here, where was it? It was like right here, and then it ends up being up here. And when this base collapses, it actually just creates a whole new event down here, right? Because it's not going to hold off this base because it was already tested, right? So it's the same thing, right?
Could be an origin there for the future on the S&P as well. You have to chart it.
The next piece of your chart. Always an event will create the next piece of your chart. So what we're seeing right now is that you don't even use this move, right? Base of the move, this is gone. You don't even use this anymore. So where's your next level? It's up here. So if you break this trend, guess where you're going, right? So then you can just simply go back to here. You can do this. And let's think about this for a second. Monthly time frame, which means we need to hard close this on probably minimum the weekly. So we're multiple weeks out. So we have to hold this price for multiple weeks, or at least start moving up for a few weeks here first to break this to go to the next possible events. This is not possible anymore, right? So you're either going to this
data points
base here to create this base, or you're going to the top of its range. Most likely to the top of its range.
You wouldn't use meta as data points, and if you were, this will help clear it up.
If you do end up holding this price for weeks and weeks and weeks on end, you go here, and then fine, this adapts out to here. But we're just simply not there, right? Look,
the only reason
we're not there
seeing
yet.
more information here is because
you're still very far away, and this has to hold for weeks on end before that event can happen. Everything we've learned thus far gives us the event. So and then you're asking, okay, well, where does it go next? Well, this is where it goes next, or this is where it goes next, and that's why it's going there and what it's creating. Because the difference between a hold level and the base of a move is very, very, a very big difference. Just like here, base of a move breaks, it goes up to its next ladder point, right? Or to create the next base of its move, which would be here. So, another, again, possibility is it comes to here, ladders off this, and just goes and creates a base here for the future. So that this is already preset to break. At this point, it likely deep dives above it, comes back, and then in the future, so it'll deep dive this level, it comes back and see if it can respect it in the future. And if it does, then you know that it's headed in the other direction, as opposed to bleeding over it and not laddering. Because the difference of going here like this is a ladder. If you go like this and then fall down, that's not a ladder. That's a reverse trend, right? So it's something for the future.
Would be an origin in that moment. I think I misspoke there.
Reverse trends, reverse levels, but events reverse levels crucial. Is what I think I meant to say. They show you like the larger scale of things, so that when you're not sure what to do in a move,
be a reverse trend there.
You go and look at your events that are being shown to you, and you can make those long-term predictions and be accurate constantly, right?
Yeah, and that's exactly what happens to Bitcoin here, right? Like it has that point of the move, it moves over, it breaks back down, right? Like, so that was the event I described that was going to happen. So back in that replay, we were roughly rating around here. Then it does end up breaking over top of it. Like I said, it breaks over top of it, but then it ended up holding its origin level. And then after that, it just simply, once it breaks this hold level, the move is gone, right? That's it. Like, the move is absolutely gone, because that's the only thing holding the breakout left, right? But I think that's pretty obvious at this point, like with what we've done. But yeah, okay, Joe, that's a really important one. If you were in the major clarities happening for me, yeah, if you were using events as data points, that would definitely have been where this lesson is going to help you out in a major way, because events become meta to use data points. That sounds crazy, but it makes sense to me. No, that's exactly what it is. That's exactly what it is. Bases of moves are to be used first. They create the events so that you know what to expect long term, and then that's where you would have had that flipped around the wrong way, and kind of been a little bit lost in translation there, right? Like a little bit of, you're using events as data points, as where the event can't be the data point, right? The data points create the events, and the bases create the events, and then that gives you the data points to use. So yeah, no, that's a huge knowledge boost for you there. So that's good. That's really good. But it's, like, butterfly effect is not an easy thing. There's a lot of information in butterfly effect, and before I even released Future of Trading, I had kind of known the path this information was all going to go down. So like, even when I first released butterfly effect, and within the first 5 lessons, as I said, like, there's going to be a lot here, but this is not it. There's going to be a butterfly effect too. Like, that was talked about very early, years and years and years ago. Because when I created all this, it was, with the understanding that there's a certain queue of things that we have to learn first. You know, so that this is completely normal, because you kind of have to get a little forward past the information you're using to start going back and understanding some of the earlier concepts, just because it's not a complete picture yet, right? But like, the complete picture takes years. Like, I've been doing this for 5 years, and I only have so much time to put it all out. But then, yeah, it makes sense as to why that switch happens now for you and not in the moment, because you do have to kind of step forward a bit. Like, you have to go 2 steps forward to understand 1 step back, if that makes sense. Yeah, BFE2. I've been talking about BFE2. I've been talking about butterfly effect for a long time, and then as soon as butterfly effect came out, like, I knew where it would end, and there would have to be another course. So yeah, BFE2. I've been talking about that forever. It just takes so much time. It's just such a bulk of time this stuff takes to make. It's not even, God, we've got 70 some odd lessons in butterfly effect 1, and like, how much that content that is. It's ridiculous. It's too much. Like, it's not too much, but it's a lot. Let's put it that way. It's a lot. But then as you go, it just all makes sense in this beautiful picture, and then it just, yeah. Like anything serious in life, it's not meant to be easy. Every career has these kind of filter points. So okay, good stream today. I'm not going to go into the metrics today. It's been close to 3 hours now. 2.5 at least, or rating around 2.5. We're going to do this Monday, metrics, as well as looking at different stuff going on in Bitcoin. So Monday morning we'll do that. Otherwise, it's been a great lesson today, and hopefully, I think this will help clear up a lot of things. So the creation of base isn't something you really ever enter on a trade. You can. Your level of knowledge has to be pretty high, because then you're getting into RA. Like, RA is where you would target bases, RA of moves. But you can miss a move and lose your position on RA as well, because you're creating the base of the move off of a point deeper in the move. Like, you RA the most polarized point, and hope to hit that and see if it has any subgroups, and go after the subgroups inside. And sometimes it'll go after the deepest subgroup, and sometimes it won't, right? So then, yeah, you can definitely do that for bases of moves. Like, we did that with this, right? Oops. Did that with that first set of RA we did here, and I believe A4 right here. Like, we did that with here to create this base of the move. Most polarized point, and then is that even just a ladder point, or is it polarity to the base? Well, we're on the weekly here, so that's not really a good assessment, but yeah, that's the base of the move. And then it did go deeper in its subgroup, but not all the way. So that would be a good spot to buy a base, right? Like, you can, but it's just deeper push into RA then. So RA's, you're going to miss moves sometimes, RAing the tops and bottoms of moves. So you can use RA definitely on bases of moves. It's actually, the next lesson is a risk assessment. In just funny enough, lessons 71 and 72 are risk assessed moves. So actually, it's like the very first form of RA. What would come next in understanding the base of the move is you would dive down into RA. So you would dive down into assessing the risk associated with buying those tops and bottoms, so that the bases can create events moving forth. So you can RA them. It's just, you've seen the RA work we do. It's definitely it's a job. It's a job. Let's put it that way. It's a job to do RA. It's a constant thing we do. But then at the same time, use all your tools and make more money, right? So